Good evening, everyone. This video is going to be a trading review and support session for May the 25th, 2022. We're having a couple of new things on the chart recently. Seeing them together for a little while now has led me to some ideas, and we are going to discuss those ideas tonight and how they are hopefully going to impact my decision making in trading going forward. And especially in these times when the ranges are pretty large and a little bit difficult to defend a trade, even though that's not really our intention. So to start the day off, start the session off, let's just kind of go through the what we were looking at as we were coming in today. And whereas coming in today, we were a little bit underneath this 9 day day average, so they were about there. As you can see, we were up, significantly above it at one particular point. We finished about at it, and right now we're above it as well. So if we take a look at the big picture chart, right, we had initially, well, in the Asian session, London did not really appreciate the fact that they went up in the Asian session. So London brought it down and created the all session low. And well, actually, the all session low was made right after the 5:30 announcement, a news announcement, where we were looking at durable good orders and core durable good orders, both of which were down and missed forecast. Now, the other thing about today was the FOMC meeting minutes as well. So that's what kind of turned things around and ended it being an up day. So as you can see, right, the minutes were released at about here. It was very volatile. All right, so there's about where the minutes were released. Actually, since it's so volatile and jumping around, let's call it there. So, it was up a little bit, then down, up, and then down significantly, all the way down to the 25% lower line. And then from there, which happened at about a little after, actually only 7 minutes afterwards, then it took off to the upside once they had kind of digested it. Um, Pretty much what it said is most of the Feds are in favor of 50 basis point hikes for the next few meetings. They did not necessarily say they're going to go beyond 50 basis points for some period of time, and so that kind of finally took a hold and see what they're going to do. But there's still, of course, risk to they I think what finally they kind of took off on, and because they did not necessarily see a retraction in GDP, meaning that they did not see any forms of a recession happening, and we will wait and see. We don't really can't call that at this particular point. I don't know. Maybe they were wishfully thinking. So this is kind of where we were at right when we opened. It was pre-market, right? Right, really right after the market, it had started to go up. And I'm first going to go through the trades that it took and the mistakes that I made today. And we all learn from our mistakes, and mine are still some of the same. But if I adopt and get this new position into my head, then that will help. So here we are at the beginning. This is the first 3 minutes, and so we finally get over that, right? And here's my first trade. No problem there. We're going up. We're above the going with the trend. We're above the EMA and breaking out. Here's my second trade, right? That one does nicely as well. So two pretty easy trades to start out with. I'll come back and talk about these blue boxes. Those are the more optimal trades. And so it actually kind of settles out in here some, in this time frame. And here's the 3-minute close. We're breaking down under the EMA here. So I take a short trade there. So that one was fast. And out of the trade, we come back the other way. I take a long trade there. And we're still not into the coffee break time yet. So now 4 fairly easy trades without any big problems. So, but here comes my big mistake, right? And I label it the big mistake. This is a problem that I have. Which is breaking out. This is yesterday's high. This is the 25% upper line, and breakouts. I didn't really chase it going into that. I was already out, but it got close. It looked like it was going up, and this is my problem. One of my problems. So I chased it, and then it started to come down. And I want to talk about this some, right? So this is my secondary problem. And my secondary problem is sometimes I take trades and add to a trade on what the market could do. Not to be confused with what the market is doing, right? So the market could come down and it could hold value high and mid R1. It could do that. And that's what I get into my brain. But it really hasn't shown that much positive movement just yet. It did not come out with an expansion. It did not come out with volume, right? So this chase was a mistake, right? And this is a trade in what I kind of call what the market could do, not what the market is doing. So now I'm long 2. I don't think I added to it anymore because there's really nothing else going on there. So then it's breaking down, right? So and it breaks down underneath the EMA, right? So I did reverse here, right? Because now it seems to be going in the opposite direction. So a short 2. Let's see, I added to it here, right? And I added to it here, and then I was out, before it hit the 2x200, and then in that total move, I think I lost 1 point total, right? Reversed here, added to it, was out here. I think I lost about a point in that whole transaction. So that didn't hurt that bad, right? But it would have been much easier if I had not chased it, right? This is a chase, and I added to it, right? So even if I had chased it, if I hadn't have added to it, that's multiple points there on the second entry to do, right? We want to avoid both, right? We want to avoid the bad entry and the bad add as well. So let's kind of go through. So I made it out of there with only losing 1 point. So now we're definitely in coffee break time, right? Here's 6:50. We're definitely into coffee break time. Many times the market doesn't do that much for some period of time, especially between 6:50. To me, anyway, it seems like between 6:50 and 6:55. Now I am, since I'm in the fast zone, right? I've colored the arrows black. Okay, so here we go. So yes, we are kind of we are underneath the close. We are underneath the EMA, and we are underneath the the minute average. Minute average is going up, right? So here's one scenario. The market is still going up, right? Yes, I reversed coming from this failed breakout of yesterday's high, and I got back to only having lost 1 point on that whole transaction. But the fast zone is moving up, the 3-minute moving average is moving up, and we're in the fast zone. So taking a trade, especially counter trend in the fast zone, It's just a bad idea. I knew I had lost, a point here, and I was getting a little bit greedy and trying to get it back too quickly, which is a problem. But so we just need to be patient. I need to be patient until things line up in a time frame, right? That matters. So this is the first one, trade. I added to it again. I'm trying to get out. I don't really like the fact that I'm in it now, and now I'm trying to get out, and it's just not moving, right? So at this point, it came back up. I'm thinking again. I'm kind of thinking what the market could do, right? Because we're in the fast zone. We're up at the higher end of the fast zone, right? If it makes it anywhere close to the lower part of the fast zone, I'm okay, right? And it has already done that once. So I'm wanting it to do an attempt to do that again. Wanting and wishing is not the same thing as what the market is doing, right? So then I'm kind of stuck. I'm in it short on multiple units. I'm in the wrong direction, and so then I take this, right. So here's the pivot from it was before, right, above yesterday's high, and the 25% upper line, and so the pain starts to happen, right. So a little bit before the 7 o'clock, time frame. No news, but 7 o'clock time frame. And so the pain starts to hit, right? So I reversed along, right? Again, above mid R1, but hey, it's been up here, right? Maybe it wants to get back up here, and I can get out of some. So again, I'm not in a necessarily a great position, right? I am away from, right? I wanted to wait closer to 7, but to see what was going to happen, but it was started to get painful. All right, so here again, another ad, right, on what I would like, what the market could do. It could have held at yesterday's close, could have, and it always kind of bounces around in some of these levels. I mean, it doesn't mean that they're going to bounce right back up, right? So it tried to bounce. There's some people around there that are going to try to bounce it around, but that didn't work, right? So it comes back down to the EMA, and we're still not at 7 o'clock yet. So it's okay. Well, maybe I'm going to get a push right after 7 o'clock. So I added to it again here. Again, it kind of popped here a little bit, but that's what the market could do, not what it is doing. The flexes are coming down. So then I'm in it long. Let's go a little bit further. Right. So let's see. Did I add anywhere in here? I don't think I added it anymore. I'm just getting tired of getting whipsawed around a little bit. I don't see any more ads. So then I said, well, I better get out of something around here towards the high. So I got out of some, right, but I didn't get out of all. I'm sure the other ones were stacked up, above in here, trying to get out, but that didn't happen, right? So then the market falls back down. Again, I'm just going to try to go through my problems. We'll get into better trades when I'm done. Now, what I could have done, and I'm when I go back and forth a little bit, I'm kind of tired of my problem, right? So I don't reverse in here, even though it probably would have been a good idea to reverse somewhere in this area, right? And trade it down to at least here. It would not have been as painful, right? And so then so I'm coming up here, right? And one of two things is going to happen, right? So so I'm coming from here, and we're coming down to here, right? So if I take a look at the middle, right, then that's kind of like the Fibonacci pullback, a 50% Fibonacci pullback. And so I'm watching for that, right, to see if it's going to break down or break up. So then it does, the 50% kind of level kind of holds, and that's the fast zone, and that's the EMA. So it does look like it's going to hold on the short side. So I reversed a short. Well, and then it pops back up again. Not necessarily taking the best, and I needed to travel, right? Since I have multiple units, I needed to travel, right? Not to be confused with just one entry and getting a quick profit. I needed to travel. So but I did, recognize that, hey, it may not be, really running. So then I'm going to get out again some. So I reversed the short, got out of some for a little bit of a position profit, not an overall profit, but a position profit. So then it's running away from me. So I recognize that, right? So I reversed along here, and I'm not going to stay in this thing forever, so I don't trust it, right? So then I go out flat again, again up in this area, right where it kind of stopped before, and it stops again. So I was scattered, my long position was scattered up in through here. So I was finally flat, so I wasn't counting on big ranges anymore. But I just accepted the loss because I wanted to look at a few things. So the big mistakes were, of course, chasing, and I didn't try to chase it anymore. I am going to go through the rest of the morning in a moment when we're looking at this idea that I have, and what kind of plays out in terms of what this short-term trend analysis is could do for us. There may be exceptions, but anyway, what this short-term trend analysis can do for us. Okay, so let's go back to the beginning of the market, and I'm going to talk about the blue areas, right? And what I'm going to point out is the let me get back to the beginning. All right, so what I want you to observe is and early in the morning, it's certainly a little bit more dynamic. We may have to make can or push trades a little bit in the morning when it's a little bit hot, but it dies down a little bit. So let's take a look. So there's the open. Here's the first scenario, right? So here's the EMA, and it's kind of moving up quickly, right? And here's the 3-minute close. All right. So when it's moving quickly, sometimes it's going to be moving away from the 3-minute average, right, or the 3-minute close, and it may have already the minute the EMA may not have caught up yet or not. So then this first trade is actually pretty good, right, after the first 3 minutes has passed. If we take a look at it, then this one was, here's the first 3-minute close right down here, right, and as it's the moving away there, while it's within the first 3 minutes, then that's sort of a indicative as well, right? It's running away from the 3-minute close. It's running away from the EMA, and so that is going to be a look at as well. Not that I want to necessarily trade in the 3 minutes, but it's just kind of pointing that out. And then we have to wait for a while, right? Because this, even though it kind of worked, here's the 3-minute close right there, still running away, right? So still trying to be a 3-minute up bar. Now we've got a pretty big distance from the EMA. So then, let's just try to calm down a little bit, because ultimately it will, tell us what it wants to do. So we have to recognize that the market's still moving up. Fast zone is moving up. 3-minute moving average is moving up. We just need to be patient. It comes back down to the daily bias. We still need to be focused on going long, right, and not short, right? And it gives us the opportunity here, right? Here's the next 3-minute close. It's a down close. It has even been down lower, right? So it's coming from the daily bias. Now it's popping up, so it may want to continue, right? And so it's popping above the 3-minute close. It's at the EMA. And so that's a good trade, and I took that one. Some of these I took even just looking at things in general, not necessarily focused on the 3-minute close in the EMA. So that's a good example, and it pops up, and then it's time for pretty much the coffee break time. So coming down now. So I actually reversed here, right? Because it is kind of coming in coffee break time. It's coming from this rejection up here, right? So it's coming from the rejection. And this area where I reversed at, is a little bit more aggressive for an initial entry, right? But it's something that we could continue. It wasn't really in coffee break time yet. It's coming from a rejection area. So this one is probably okay, right? So we'll talk about the shorts in this direction a little bit later. And now it's coffee break time. And as you can see, it's just really not doing much. As it's coming out of coffee break time, well, I mean, it's coffee break time until 7, but anyway, sometimes the 6:55 kind of time frame starts to react. Still a little bit of distance here between the 3-minute close and the EMA, but you can see here, right, it's starting to line up. So I didn't mark this one because it's not necessarily that clear that it's going to be a good one, but as you can see, it did work. All right, so let's go through and find some other ones that do line up. This one maybe is a lineup, right? I mean, and it would have worked. The only problem is it's kind of going into the volume point of control, so that's kind of why I didn't mark that. You can see it's messing around with the volume point of control. So it's just going to be kind of a gut feel on if it, the as you can see down at the bottom, the AVR was kind of positive, right, for a while. Here's another short, right, opportunity, right. Here's the 3-minute close. There's the EMA, and it's breaking you down again from from a rejection, right. So that's a possibility, right? So this area, anywhere in this area would have been okay. I think I like this area, not necessarily this one, right? Because that's going into the minute average. I like this area more, right? We're getting some expansions. Okay, so I'm ignoring my previous mistakes. Okay, so I reversed along here, right? Where I reversed along is also a good area to go along, right? So these reversed along areas, would have worked in this upward direction. So right here we've got the 3-minute close, right? The EMA is right on top of it. We're kind of getting some breakouts, so that one would have been just perfectly fine. And notice I'm not too worried about trying to chase it any further. Once I'm in and out, once I'm out, I'm out, and then I'm waiting, right? We have to wait essentially maybe for the next 3 minutes close to see what it's going to do, or the 3-minute close after that. In that case, it's the next 3-minute close after that, right? It kind of goes sideways for a while up in here, comes down to the volume point of control. The volume point of control is holding. There's the close. The EMA catches up, and then up it goes, right? So there's another one. So let's see. There's many more. I've already stopped. I think I've already stopped trading at this point. So okay, so we have to wait some more, right? Wait. EMA is catching up, right? So EMA in the 3-minute close is now pretty close, right? The flexes are starting to move, so there's another opportunity, right? There was no real selling going on in that area. All right, so now we wait. Right, so here's the 3-minute close. It's going to go sideways. EMA is coming up, right? I mean, it kind of comes down close, kind of in between, right? And then it pops back up. Looks like it's popping through. So there's another one. Now we wait, right? So we didn't get down to the EMA here, right? So I didn't mark this one because it's kind of going into R1. So we just have to, a little bit too much distance there, so so if you're going in here, maybe you could have gotten something, but you're also going into R1. All right, so it gets rejected at R1. So I'm not marking this because it wasn't the perfect alignment, but you got rejection here, and now it's running away from the 3-minute close. Not marking it, but it is just note the price action behavior. So now it's 743. Market's kind of slowing down some. We're not getting that much selling through here, but here's the other short kind of an opportunity, right? It does break into the fast zone, right? And then it's the top of the fast zone, the EMA, and the 3-minute close, and then it kind of comes down. Now this is not necessarily it is in the fast zone, but at least it's necessarily right in the middle of the the coffee break time. This is a little bit more dangerous. I'm not suggesting or don't necessarily like trading in the fast zone, but it was an alignment. I marked it because it was an alignment, right? And I'm going to be watching these alignments. I think there are more. I think I let me see. Yep, here's another one that's a little bit. At least it's kind of moving out of the fast zone, right? So here's the 3 minute close. 3 minute close rejected. It's falling back under the EMA. It has been as low as the 3 minute moving average, right? And then it breaks down even further. So that's another example. Now we're underneath the 3 minute moving average, right? Let's see, it's 807. I think there might be. I mean, so the market at this point, I'm continuing to look and try to mark these things, but it's after 8 o'clock now, and it's a Fed meeting day, so the market is not doing big movements at all, right? It's starting to think about it. It may do it a little bit later. One more, as it's kind of going sideways here for some time, and the 3 minute close and the EMA are pretty close right here, right? We're starting to wiggle down. You can see the arrows on the flexes, forex distribution, and then it pushes down, but only to the 5 minute moving average. I think that's one more same exact trade, almost right up to the 3 minute moving average, coming back down through the fast zone, which is very narrow, and now we're even getting some expansions and then back down. Right, so that's essentially 8:30, and that's all I marked. So that's so let's see. Somewhere I did a summary of what of the potential longs. So the longs, if we were patient, were pretty easy, right, and fairly easy to see because the market was also going up. Right, the shorts were certainly, as you can see, less frequent, and some of them were a little bit more dicey. But if you took 8 trades at a point and a half, that would be 12 points, right? If you took the four shorts and that were reasonably looking, right, then that would be 6 points. So the two combined, right, would have been 18, easy, don't need to add to it trades, right? Which is what we're looking for. We just have to convince ourselves that yes, there will be. I mean, today wasn't a high volume day. It was a moderate volume day. It started out, over 200, but clearly a lot less than 300,000 contracts. So we just have to be patient. I have to be patient. I mean, some of you, or I know, are more patient than I am. Um, that there will be enough trades that comes along through the day that we don't have to push anything. All right, so that's my message for the day. So the keys are, for me, waiting for kind of the alignment of the 3 minute close and the EMA, and taking it in the directions, of course, of the flexes and volume, and primarily the trades are faster and easier if the market is tracking the overall direction of the fast zone and the 3 minute moving average, right? So for a while, when I first introduced the 3 minute moving average, before I got all this other stuff going on and in my head, I was doing that, and the trades were easy. So I'm going to try to do that as well. And if you're the other good part about it, if you're taking trades pretty close to the 3 minute close and the EMA, and it goes against you, that's also the area that you're going to potentially want to reverse at as well, right? So you're not going to be taking trades away from the critical area, right? Just in case it doesn't work. All right, so that's my message for the evening. I'll take any questions that you might have. So software is finalizing, so it should be get a next little release to make setups and that kind of stuff a little bit easier. Almost for me, you guys can use the TMLs, but a little bit for me. So any questions? My chart has more big arrows than what? Than yours, or let's see. It should have. I think it should have. Well, let's see. No, because I think the filter is in yours. So it should not be a lot different. I know you were asking about or you're making a comment about the closeness of the flexes. Yeah, yeah. Just watch my chart versus your chart and let me know when you see some little differences. Really shouldn't have that much difference in the data. There is one thing. There is one thing that I don't know what I would end up. So I've added some flexibility on the EMA calculation itself. I have made it flexible so that you can determine how often you want to calculate it, um, versus just letting it calculate at the end of the 1 minute. I think for right now, um, I think for right now, I'm going to just let it calculate at every 1 minute. So we'll talk more. I may watch it both ways a little bit. All right. If you don't have accumulation and distribution on your chart, that comes from the Renko chart. And if I remember right, you don't necessarily set up a Renko chart. Is that still correct? If you want accumulation and distribution, you have to have a Renko chart. Okay. You do have a Renko chart. You do have it in there. All right. So look on your Renko chart and see if on your Renko chart if you're getting accumulation and distributions. Okay, so you have Renko chart on your Renko. So then come over to the your 5 second chart and make sure you have Renko Sim activated. Okay. Every time that this has happened, a couple people have had this issue. Every time that this has happened, it seems as though it has been some corruption in either the chart and or the workspace. So I would say since your Renko chart seems to be working, right, and you're getting them, my suggestion probably is going to be to you try this first to delete your 5 second chart that it is not working on and recreate your 5 second chart. So if that corrects, if you do that, if that corrects the problem tomorrow, for instance, or if you could look at it tonight, then you're all good. If that and you might be able to spot that at some point tonight. It doesn't show it in history, right? It only shows it in real time, right? Okay. Um, it only shows it in real time. Yeah, when you were messing around with the charts, then maybe something happened to that chart that corrupted it. I mean, obviously 8.4 is working because you're seeing it on my chart. So there's nothing wrong with 8.4. It could have been for whatever reason when you were setting up. Well, you deleted the 8.3 version on your 5-second chart and you added 8.4, right? So that's a change. You're or you're saying you didn't delete it. Excuse me. Yeah, I wasn't implying that you changed the inputs. Only you messed around with that chart. Something may have happened inside of multi-charts that we don't control, but it could have corrupted something. That's what I'm saying. Delete that 5-second chart and start over, and apply the 8.4 TML to that 5-second chart. And if that doesn't work, right, then it may be a workspace corruption, and you may have to start a new workspace. Alrighty. Any other questions? Okay. No other questions, then we'll go ahead and end it tonight. Hopefully some folks watch this video um, across the waters. Okay, hang on. All right. Do we have a couple of questions? Let me see which one is shortest first. Um, Sean, I'm not quite sure I understand your question. Oh, you mean okay? Can I do it on the one I'm projecting? So you can see it a little bit better. Let me play with something. All right, so that's using the normal scale. So you want time and price. All right, so let me do one thing, right, which may help it a little bit. That didn't really change the font, right, but it kind of spread it out a little bit. All right, so let me work on. Let me see if I. Font is. Let me try to go to 10. This is the x-axis. To the y-axis. 10. You like that? Is that too big? I mean, I think I can do, I think I can do 9. Let me do, let me do 9 here and see which one oops, yeah, 9 here. All right, so the x-axis, no, what did I do? I think must have been the y-axis because that's the one I saw. Yeah, so this one is 9. This one is 8. Which one do you like better? Okay, let me, or that one was 10, sorry. All right. I'll, maybe I'll talk, see, I'm not too sure which one I like better myself. But anyway, all right, so there's that one. All right, so other question was talking about the ATR and how to use it. Okay, so again, the definition of the ATR is the average true range. It's the size of the candle. 20 bars back, I'm using 20, right? And it takes the average size of the candles, not the 5 second candles, the average of the 1 minute candle for the 1 minute ATR, and the average of the 3 minute candles for the 3 minute ATR. All right, so once the software calculates the average true range, then it takes the moving average that it's based on and either adds or subtracts it. Okay, so that's what the lines themselves are. Now let me try to find an area where it comes into play. Now let me go back earlier in the day. Okay, so here is some examples in the 7:30 kind of time frame. All right, so let's just talk about this. The yellow ones, it's color coded to which moving average it is. So the yellow ones are the 3 minute ATRs, and the 1 minute ATRs are the ones that matches the 1 minute. So here is price action, and it's above the 3 minute ATR, and now it's coming up to the 1 minute ATR. So kind of what I notice here is if price action, unless the market's just once it goes above both, in this case, right? Once it's above the 3 minute ATR and the 1 minute ATR as well, are in that area. When it starts to pull back, right, with some volume, it may come down a while, right? So in here, right, no volume yet, right? Here it comes back up, and now it has hit R1, right? And now it's coming down. I think it did end up coming down, but so let's just so that's the indication, right? So let's just see how far it came, right? So back down into the fast zone, right? See, it came all the way, right? It gave us this short opportunity here. So this is a recognition that, hey, they're not happy being up this high. It came back into the fast zone, pulled back here, and then came back down even further, right? So that's how you can interpret what might be going on. Now let's just go back. Now see, we're at the 3 minute moving average, so we're only oversold on the 1 minute, right? So it doesn't necessarily, it's not necessarily as powerful. For instance, this is just back to the 3 minute moving average. If the market wants to continue to go up, it can. And I don't really remember what it did, but here's the 1 minute. I don't think it ever got to for a while. I'm still looking. You're looking for the combination. You're really looking for the combination of both if you really want to do it. Now here's both. Well, there's the. I could see it there for a minute. There's the 1 minute. There's the 3 minute. Let's see if it ever comes down. All right. So now it's 8:35. So now we're below both, right? We're below both, and we're below the 3 minute, moving average, etc. Now, if it ever grabs, and I don't know the answer to this. Now, if it ever grabs and starts to go back the other way, it may go for a while. I don't remember if it did or not, but anyway, so the market's oversold, hasn't really done too much just yet. Usually, you want to wait until it holds at a 3 minute close at least, and then starts to go the other way. Now here it's starting. Now it hit the Globex, the daily bias, right? And it's been oversold. Now it has a little bit more of a reason to go the other way, right? Let's see what it does. See, it's moving up, moving up. Only makes it to the EMA. So sometimes when it does this, and I want to take kind of the counter trend trade, sometimes you can see it, you can already see it, it is coming up. Sometimes I wait till it breaks, it's above the 3 minute close and the EMA. I think that's a good idea. But anyway, you just kind of depends on how much they're buying down here. So see, once they have been oversold, right? And it hit something down here that, remember the last one was what, R1 or something like that. It hit and held, and see, now it's going the other way, right? So how far does it go? I don't know. It's not like we're going to hold it forever. We are into the fast zone, and looky here, right? We're almost to the 3 minute moving average to the other side yet. So that's how the ATR is calculated, and that's how you can use it. Clear enough? Any questions on that? Okay. Any more questions? Thanks, Sean. You too. Anything else? All right. Good night. Let me wrap this video up and I'll get it posted. So you guys have a good rest of your evening. See you in the trading room tomorrow.